Welcome back to part 6 of the video series for course 201, Building Statistical Arbitrage Trading Strategies, Bitcoin and Gold Futures Markets. Here in part 6 we are going to diverge from Bitcoin and gold and talk about silver. Decided to put silver into the video series for course 201 as it is a precious metal similar to gold, and it's an inflation hedge in the same conversations as Bitcoin, gold, so you can include silver in there as an inflation hedge against the US dollar, and really also just want to show the flexibility of the statistical arbitrage trading strategies being taught in this course and how dynamic they can be and repurposed across exchanges and across products. It's really understanding the fundamental principles of how futures markets work, the market microstructure at play behind the scenes. But first we will go through the risk disclaimer. Everything discussed in this video and all content on marketmentor.io is for educational purposes only. I am not in any way providing financial advice or soliciting financial products. Trading futures markets carries significant risk and can result in loss of capital. So as we have discussed, there are some similarities in the silver futures markets relative to gold and Bitcoin. For gold, the similarities are in the order of operations in pricing a calendar spread market. Here we have the September UZ SEPDIS calendar spread, and the way this market is being priced is leg 1 September minus leg 2 December outright. The relative value there is being expressed in the calendar spread conventionally as we know gold to be priced. The similarity that silver futures markets at the CME share with Bitcoin futures markets at the CME is the calendar spreads trade in reduced tick. So you will notice the outright markets are moving in increments of 5 basis points, and the outright markets are moving in increments of 1 basis point. So the excuse me, that's in increments of 50 basis points in the outright markets and 10 basis points in the listed calendar spreads. Excuse me there. So the long story short on the reduced calendar spread is that the silver outright markets are trading in increments that are greater than the increments in the calendar spreads. Thus, it's a reduced tick, and you see the increments in the outright markets are moving in fives, and the increments in the reduced tick calendar spreads are moving in ones. So we can synthetically create the nickel prices in the silver listed calendar spread markets, synthetically working orders in the outright markets. That's similar to how we structured the Bitcoin statistical arbitrage trading strategies. So those are some of the similarities and reasons why I am incorporating silver education into this video series for course 201. And now let's start to make some markets for silver. So we're going to take a look at the outrights. We see SEP, DECE, and March, and we see the corresponding calendar spreads. And we remember from the prior series that we can rename these widgets to represent the A market, which in this case will be UZ, and we can also make the B market, which is ZH, DECE March, and we can make the C market, which is UH SEP March. That's SEP 2020, March 2021. And now we're going back to the fundamentals, the foundation of the standard 6 execution protocol, which is A plus B equals C. And if we look at the A market, A plus B equals C, This is going to be a standard principle of this of what we're learning here. So we're gonna now take a peek at the best bid in the A market, the best bid in the B market, and we're gonna make a market there in the C market based on these best bids. And we see 254 bid in the A market. We see 258 bid in the B market. That allows us to place a one lot bid in the C market at 512. So I'm going to go ahead and place that there. And the reason I can bid 512s is I can sell 258s in the B market, and I can sell 254s in the A market to scratch this position where I'm not able to turn it for a profit. So it's right now I'm holding a risk-free open order as it can be scratched, less commission, and we can come up to the offer here in the A market, and we can add our best offer, which is 253. There's 135 contracts working on the offer there in the A market, and 256 in the B market, only 3 contracts working there. So that's going to give us a price of 509, and we see that there are contracts already working there, and that would be that's how they're getting those prices. So I'm going to offer behind at 509 and see if we can get to the front of the queue at some point. Maybe those orders cancel and allow us to get first. But I'm going to bring some orders into the book, up and down the order book in the silver C market, September 2020, March 2021 listed calendar spread. So now we are making a market here down the curve in silver, and we are leaning against our A market and our B market. Same principles apply in this as we understand the fundamentals of this A plus B equals C. To now move over to the outright markets, we're going to want to add a fourth month to be able to build out our standard 6 execution protocol, and we're looking at SEP, DECE, March. The next month we're going to add, I did the due diligence on the open interest. It's going to be the May contract, so we're going to add, and that symbol is K for May, and we're bringing in the K silver May 2021 outright market. I'm going to bring that below, just as we've done with the prior examples in Bitcoin and gold. Now we can add this market here. We have our SEP, DECE, March, May outright market, and now we can bring in the corresponding calendar spreads for December, or excuse me, for the May contract, and that is we're going to add the new C market, the double C market, and the new B market. Let's just resize these a bit. Okay, and we're going to clone. Now this is going to be our new C market, which is silver, DECE May, that's DECE 2020, May 2021. We're going to go find it in the list. DECE May, that's DECE Jan, DECE March. Let's see if we can find DECE May, that's DECE July. Not in chronological order here. DECE SEP. DECE, might have missed it. DECE Jan. We're looking for DECE May. There's a lot of silver contracts, as you can see. DECE March. I might have missed this one. Might have to go back and look. DECE May 2022. Well, we found the 2022 contract. That's not what we need. We need the DECE May. Let me see if I can just explore it. So what you can do is come in here, it's silver, and we just come down to December. It's probably a better way to do it anyway. And we look for the DSMA. Let's see if I can select that. I might have to choose it here. Spread. I come down to silver, which is SI. And we're going to go into the instruments and look for DSMA. There it is. Now I should be able to select that. Here's the DSMA market. Now let's see if we have better luck searching for the SEP May contract. Maybe that one's a little bit closer on the list. SEP May, perfect. There it is. That's the UK market. And now we need the March May HK silver HK market. So we'll go into spreads. Let's see silver March 21, May 20. I might just explore this. It might be tough to find that one buried in the list. And this is a spread. So we're going to drag down to silver, SI, and we're going to find the March May. That's calendar year 2021. Silver March May. Okay, now we have our corresponding May calendar spreads for our standard 6. If we bring this all together, we are looking at the silver SEP outright market, the silver DEES 2020 outright market, the silver March 2021 outright market, and then the May outright market is our fourth outright to complete the standard 6. We have the listed calendar spreads: the A market UZ, the B market CH, the C market UH. This is, just for good measure, we're going to go and rename these. This is the new C market. This is new C ZK, and new C market ZK. This is just for good measure and good to learn. This is the double C market UK, which is SEP May, and then this is the new B market, and that's going to be the March May calendar spread. So now we can really see this well. So we have the A market, A plus B equals C, C plus new B equals double C, A plus new C equals double C, new B plus B market equals new C. Perfect. All right, now let's push through and make some markets here. We are already making the C market, so let's now try to make the double C market. We have offers at 509 in the C market, and we also have offers in the new B market at 189. So that means we can bring in offers to the double C market at 698, and that's one better than the best offer resting in the book, so we'll take it. Let's offer 698s because I can buy 189s and I can buy 509s to scratch that position. So I'm working to offer 698s. And now if I look on the bid there, I have a bid at 512 in the C market here, and I have a bid at 200 in the new B market, so I can bid 712s. One better than the best bid resting in the book. Great. I'm going to add some liquidity to the double C book. Let's offer it up. There's some stuff in the book here to lean against, so let's bring some orders in. Let's make some markets. I'm going to offer this market as well, really deep in the book. And we can bid below a bit, and we can offer above up here, fill in some prices. Now let's bring some liquidity into the new C market. Let's look at our best offer in the new B market, which is 189, and let's look at the best offer in the B market, which is 256. So we can bring liquidity in at 445 in the new C market, and you see we are being primary market makers here in the new C market. And I really should only offer one there because there's only a one lot at 189 in the new B to lean against. I do have some stuff up here so I can fill in behind. So we are the primary market maker at the top of the book in the new C market on the offer. Let's look at the bid now. We see a bid in in the new B market, I'm just filled here in silver. I'm going to rebid that because we are still bid 254 in the A market, 258 in the B market. So I'm going to rebid my 512s, which I just got filled on. I think I just bought. I can look at the fill window to see what my fill was there. I just bought a SEP March calendar spread at minus 512. You see the fill. So that's what that was. And I could sell 258s and sell 254s to scratch the position, but I won't do that now. I might offer one lot. No, it's not. Let's just let it play. Let's go back to our market making, the new C market on the bid. We have already established the offer, and we're getting filled again. Let's just keep it rolling. So the best bid in the new B market is 200, and the best bid in the B market is 258. So I can bring bids into the new C market at 458. It's better than the best bid. So we are primary market makers again. We're going to stack the bid a bit in the new C market. And now let's take a look at the double C market from the left side of things, A market plus new C market. So the best offer in the A market is 253, and the best offer in the new C market is 445. So if we add those together, we get 698. That's actually the price we're already working based on our right side of the standard 6 protocol. And so that lines up well. If we do the best bid in the A market, which is 254, and we add that to the best bid in the new C market at 458, we're getting 712 to bring into the double C market bid, which is what we already have there. That lines up well with our best bid from the right hand side. And I'm going to rebid this I'm going to keep bidding this 512 because it's technically risk free. I could start to offer 510s, I guess, but I'm holding a position here, and you see this 258 is holding bid. Looks like an iceberg order, and this 254 is still bid here. As long as it is, I can maintain the position. But if I don't want to be long so much, what I can do is I can take a one lot off right now. I can sell this 258. I just don't want to push the market down. There's no real reason to do it. It looks like it's taking the volume, so I'm going to hold off on adjusting this price. I'm going to hold this position. So now if we look, we are making markets in the C market, in the new B market, in the double C market, in the new C market, and we can even bring some stuff into the B market, since there's other bids and offers there that we can interact with. And we're also doing the C market, so we theoretically are bidding the B and the A market. I can bring some stuff into the A market book and try to get into Q there as a market maker. And to wrap up silver, we can launch our outright market making. So let's do the SEP UZ spread. I think I already have that made. Let's work it in leg. Let's actually edit this to work both legs. So I will actively quote in both legs. Save that. We'll launch it. Open an MD Trader. Let's get this thing working. And I will offer 250s. Let's see if I can get an offer in there at 250. Alright, so now you see my orders are working in the SEP and DES outright. I'm now going to put a bid in there at 255. You see my orders are working. And so I'm happy to work. You see I'm already starting to get some fills at 255. And I'm also getting fills up here in the C market. So you see this is where this is really starting to get interesting already. And even though we're just in simulation, but you see how we can start to really get some flow going. 258, 254, 512 is still a good bid here. Let's come back up to the D Smart. Launch the D. Now I'm selling 250s, so you see I'm turning some ticks for profit. And let's launch this D Smart calendar spread. It's going to be UH. I'm going to launch this market and get some orders flowing here. And let's bring some bids and some offers in at, I gotta check my price. I'm gonna work 550. I'm gonna work 520s, and I'm gonna work 500. Now you see I'm working offers in March, and let's see. Let's get 255 and 260. I'm selling 255s. Working some stuff here. That's the market spreader. Let's see if we can work out of some of this stuff, and then we can launch a May spreader, which is a UK spreader. I'm gonna mark it right here, and now we're gonna bring liquidity into the March outright, and that's gonna be at, let's call it 725 to start on the bid, and we'll work at 695 on the offer. And I guess I can move my bid up a bit in May. So now let's minimize this. Let's try to grasp what we're looking at here. I'm going to put an order back in. Okay, so now we are making markets in the silver SEP outright, the silver DEES outright, the silver March outright, the silver May outright, best bid, best offer. There, we're making markets in the silver SEP DEES calendar spread, the silver DEES March calendar spread, the silver SEP March calendar spread. We're making markets in the silver DEES May calendar spread, the silver SEP May calendar spread, and the silver March May calendar spread. So as you can see, we have learned how to bring markets into 1, 2, 3, 4, 5, 6, 7, 8, 9 silver listed markets at the CME. This is one of the most actively traded precious metals markets in the world, and we are demonstrating a market making trading strategy based on statistical arbitrage in a simulation mode, and this should be very helpful in grasping professional trading strategies. Thank you.